The fact that stocks are going up, gold is going up, and Bitcoin is going down is a sign that it's lost its shine. I think anybody who, I think a lot of gold bugs moved into crypto for a while, but now everybody's like, forget it, forget crypto. Let's just focus on precious metals again, and that's where everybody's at. Now, if we go and we take a look at, this is something that's really interesting, and I've covered this many times before with our paid subscribers. If we go back and we take a look at gold, silver, platinum, palladium, we can leave the miners. But what I want to show here is the yellow line at the top is gold. And gold topped out over here in mid or kind of July, August of 2011. And what you're going to notice is gold miners actually topped out much sooner.
According to Chris Vermeulen, precious metals have recently shown strong upside, with silver hitting its target and platinum making impressive gains, while gold quietly breaks out. And the stock market is rallying into year-end. However, he warns that when investors rush into fast-moving metals and miners ahead of gold, it's often a sentiment signal of late-stage enthusiasm that can lead to sharp pullbacks.
And so we're in this feeding frenzy right now where everyone is piling into all of these plays, and that is usually not a good sign. It's people looking for the faster moving metals. There's nothing wrong with it. There's big returns to chase these because they could still have some big moves, but it's a sign of greed. People move into the faster moving stuff, miners, silver, platinum, palladium, when they start to run, and they forget about gold. And then eventually everybody these other metals will stall out, and then people start to move in, and gold continues to soar and move higher. And so that's the early warning sign. And that's kind of where we're at right now. We got everybody piling into anything metals and miners, and gold has been really just slowly kind of falling under the radar, just starting to break out. So that's what we need to be aware of. The sentiment analysis is very powerful in allowing us to know when big major tops are starting to take place, and it means we could see the precious metals start to run out of steam, which is not what anybody wants to hear. And of course, usually when everybody is against a move, everybody's long and excited about metals, that's when you get the most pushback, right? Nobody wants to hear anything negative on it. And this is something we've been talking about for months, or actually for a couple of years, waiting for this to unfold. It's finally starting to unfold, this sentiment of people piling into silver and miners and all of that first. So this isn't any surprise. This is something we know to watch for, and we know what it means generally and how the markets are going to react. And most people get caught off guard holding a ton of gold and silver and metals, only to watch a ton of it get wiped out and give it back after. After these type of moves, we have seen pretty much gold pull back 34%, silver, platinum, palladium pulling back 60, 70%. And not saying they're going to pull back that much, but even a 20 or 50% pullback or 30% pullback will be enough to scar a lot of people for a long time.
Vermeulen also points out that Bitcoin is currently weak relative to stocks and metals, suggesting a rotation out of crypto, and emphasizes that disciplined risk management and watching price action, not bias, are key to navigating the markets. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
We've got some pretty big moves in the markets. Gold starting to break out and run higher. We had silver post some pretty big gains. Silver has run all the way up, hit our 20% target yesterday, which was pretty exciting. And if we take a look at platinum and palladium, just insane moves here on platinum, up like almost 10%. It just continues to push higher, and we've got palladium up about 0.5% this morning. Platinum's up about 2%, 2.5% this morning, but we've got some pretty big moves going on in this space. The markets have been doing pretty much what we've been expecting. The markets are stabilizing. They're moving up into the end of the year for the holiday rally. We needed this little shakeout here. If we look, we were looking for this shakeout, this pullback in the market to run all of these little stops. We talked about that back over here when the market was trading sideways. I said, listen, the market is going to want to sell off 1.5% or 2%, or down below these lows to try and run all of these little pivot lows where people will have stops. We saw that the market got oversold. We saw panic selling, and then boom, the market starts to rally, and now we're pushing up, testing all-time highs. So the stock market's doing exactly what we think. have been expecting what the charts have been telling us. I know a lot of people have been going through the roller coaster ride through this phase right here, this gap up all the way through over here and over here. People panic. They listen to the news. They listen to all kinds of people's opinions who really are just based on, they have a bias. I don't have a bias in the market. We just follow price action, and I tell you what it can and can't do every time. Now, when we go and take a look at the markets from a seasonality standpoint, December for the S&P 500 and for the NASDAQ, a little bit of a pullback. Here we are, and we've seen the market more or less bottom out this week over the last couple of trading sessions, and now it's starting to potentially have that push higher. And gold is in the same boat. It usually has a little bit of weakness at the beginning of December, and then we start to rally and push higher into the end of the year. So that's kind of where we're at in the markets. Now, yesterday we did enter a new position. If you're on our newsletter, our free newsletter, you would know about this, so you can take advantage of it. If you go to our website and scroll down a little bit, you can join this free newsletter. If we go back and take a look at the equities market, so money was flowing into both equities and precious metals. Today, precious metals are relatively flat. We've got the indices kind of mixed. The S&P 500 here on the verge of breaking out to some new all-time highs. We have the NASDAQ. If we take a look here, it isn't quite near the highs. It's continuing to struggle. The Magnificent Seven have definitely pulled things down. We've seen a little profit taking in some of these growth stocks, but overall, it's starting to come to life. If we actually take a look at the Magnificent Seven, we have it's starting to really pick up speed and really starting to pop yesterday, which could start to carry over into the next couple of trading sessions before the end of the year. We could see something like this where it starts to gap and run and get that rest of that holiday rally. Silver topped out 6 months before gold did. We saw platinum also more or less top out around the same time as silver, and it really just traded sideways with some pretty big pullbacks percentage-wise along the way. And we saw palladium actually top out months and months before gold did. So you're up to speed whenever we have a new trade issued. And of course, we've been hitting we've hit 3 targets with our silver trade, our SLV trade. And anyways, if you want to be up to speed on things, make sure you get on our free email list to be up to speed to not miss out. Now, if we take a look at the rest of the markets, we do have Bitcoin. Everything is moving up but Bitcoin. Bitcoin is really just floundering. If we zoom out the big picture of Bitcoin, there's potential that we're having a cycle low. Now, with that being said, the chart looks terrible. It doesn't look very good. It was giving this broadening megaphone formation we talked about way back over here. I said, don't touch it. Be very aware that this is a bearish pattern. It has broken down, and now it's putting in what looks to be either a bear flag, and it's going to go a whole lot lower, or it is going to try to carve out a bottom, but it needs to do a ton of work before it can build a new super launch pad to go a whole lot higher. And I hear that all the time. People are always like, well, you didn't really tell us much. You said it could go higher, it could go lower. If you listen and read in between the lines and follow along, it can always go in either direction. And I know a lot of people out there, they just want an answer. Do I buy it? Do I sell it? Where's it going? Just tell me where it's going. And nobody knows. That's why we navigate it and we manage positions. And again, if you want to copy our trades, like our accounts are pushing up to all-time highs. The markets are moving. We're in all kinds of different trades right now. It's very exciting. You just need to follow the signals. Join my newsletter at thetechnicaltraders.com. You can come here. My whole point is to help you avoid bear markets, preserve your lifestyle so it doesn't get destroyed when the market does correct. And precious metals, while they're working great right now, have devastated most precious metal bugs for many years. Many times they've lost huge 30, 40, 50% and gone a decade without returns. Imagine only owning precious metals when they're on fire and watching them collapse and you can buy them back later. That's what I do. We navigate the markets so you can protect your retirement, and I help you through all of this stuff. So if you've missed the rally, if you're on the wrong side of this rally, in whatever asset class it is, I can help you fix all of that and navigate these markets with just 5 to 12 ETF trades a year. And you can add leverage. If you want more juice and excitement, you can always ramp things up. I provide high probability signals that generate money, and you can apply however you want to attack that with leverage.